What's going on, YouTube? It's your boy Credit Monster back here. You already know what to do. If you like this type of content, please like, comment, share, and subscribe. This is going to be a faceless video because my barber's on vacation, but I can't leave y'all hanging anymore. Listen, I'm about to give y'all the juice. This is the juice. This is the sauce. This is the Mac. Y'all know how I like to play around, but let's get serious, man. Listen, you don't need credit repair companies, okay? I'm about to tell y'all, like, I am a credit repair company, by the way, but you do not need credit repair for the most part. There's only certain situations where you need credit repair, okay? Now, the first situation where somebody might need credit repair is, like, they need a company, is if they don't make enough money to pay their debt. And the reason why I say this is because you might lost your job. Like, you might have been making like $60K a year, and you had gotten some credit cards and you was living off of that, and you might lost your job, and you might have been spending your credit cards, and you just didn't get, you didn't get gainfully employed. You got like underemployed. So you got a different job, but it wasn't the same pay. Like, you might be making like 40K. You used to be making 60, now you're making 40. That's understandable why you would have bad credit at that point, because you're not making enough money to pay those liabilities that you had racked up from when you was making good money. So at that point, charge-offs might have happened, things like that might have happened to you. And the thing is, if that happened to you, then you're going to need to repair that, but you might not be having enough money to pay all that. So it might make sense to pay $1,000 or something for a credit repair company to go ahead and dispute that over the course of 9 to 12 months. However, that is if you're not planning on doing nothing drastic with your credit, like getting a car or getting a house. That's if you got time. Because, like, let's keep it real. It's going to take time for these things to come off your credit report. A credit repair company is not a magician. It's not a magic show. They don't just, 1 month everything is off. I mean, you could get results within 1 month, but 9 times out of 10, no. It's going to take time. 3 to 6 months at minimum. Sometimes as long as 9 to 12. So you're going to have to be patient, and it might make sense to just spend $1,000 to get rid of $10,000 worth of debt, versus if you was to settle that, you probably have to spend at minimum $4,000 and probably more to get rid of that debt, like if you settled it properly. And that's if you have the stomach to deal with those people, to talk to those people and negotiate that. So, but, all right, so let's take it where you don't need credit repair. If you still make $100K a year, maybe you had got into debt when you was only making $20K a year. So you got little person debt. You don't got that much debt, but you make $100K a year. You should be able to pay that off within 1 year. Like, even if you didn't settle it. But I do suggest you settle it. It's the same as if you paid it in full. Settlement is it's the same thing. They try to make it seem like it's not, but it is. You can even settle it for pay for deletion. You could get it deleted by paying for it. So this would save you tremendous amount of time. Tremendous amount of time. The only thing that's stopping those people, and this is why they think they need credit repair companies, is they don't have good financial They don't. All right, so they don't have good discipline when it comes to their money, and they also don't have a financial game plan, like no budget and no banking system. Okay, so you need a budget. These are the three things that you really need, and you need these things no matter what. If you want to become financially prosperous, you need these three things, no matter how much money you make, no matter what your credit situation is. Because even if a credit repair company wipe your credit clean and now you have a 720, if you don't have these three things, you will be right back at 550. You need discipline. You need financial discipline, okay? If you say, I'm not going to spend more than $100, you need to not spend more than $100. That's a decision that you have to make. Also, you need a budget. You need to be able to see how much money you make and how much money you are predicted to spend. You need to have that on paper or on a computer. You need to have that because that gives you clarity in the numbers. They say if a business owner doesn't know their numbers, then they don't have a business. And that is true with business and personal, because personal is business in America. So you need to know your numbers. You need to know, okay, I make this much, I spend this much, and I have this much left over. And this will also help you pay off your debts. And this will help you this will also help you stay out of debt. And this will also help you save money for investments and all that other stuff that you want to do, that I know you want to do. But you need a budget. There's no shortcuts. The third thing that you need is a banking system. So this is how you receive money, how you spend money. How do you make sure that you don't overspend? You could have this embedded in how you conduct your banking activity. I always suggest for a beginner level to have 3 checking accounts. One account, don't have a debit card. You just receive money into it. This is where your paycheck go. This is where you get direct deposit. This is where you put your money. It goes into this one checking account. We call it a revenue account. We name our checking accounts. We call it a revenue. Then you have your everyday expenses, this account. So this is the debit card that you do keep with you. It's a different checking account. You keep this debit card with you when you go get gas, when you go get groceries, when you pay for stuff that's non-essential, Netflix, Hulu, things like that. Then you have your fixed expense account. This is the card that you don't, this is the account that in a debit card that you don't keep with you. You keep this in a drawer somewhere. You never really touch it. But everything is on auto pay with this card. So you got your life insurance, your car insurance, your mortgage, your rent, whatever the case may be. Light bill, electric bill, water bill, gas bill. These are essential things. This is on auto pay, and this is coming out of the fixed expense account. So you have 3 accounts. So this prevents you, if you know that all your fixed expenses add up to $1,000 a month, then you just make sure you keep $1,500 in that account, and at the end of the month you put another $1,000 in there from the revenue, and this keeps your bills paid. You don't even have to worry about it. It's on auto pay. It's on autopilot at this point. And you don't touch that debit card, so this prevents you from spending your bill money. As long as you internally transfer the money from the revenue account to the fixed expense account. And then if you see on your budget that you spend about $500 on everyday expenses, gas, groceries, all that stuff that you keep your debit card for, even stuff, leisure stuff, like coffee, relaxation, entertainment, all this is on this budget. You budget out for it. personal money. This is like whatever. Like, this is all budgeted in the everyday expense. So if you know that add up to $500 hypothetically, then you make sure you keep $750 in that account. You just basically at the end of the month you transfer $750 from your revenue account to that everyday account. You don't take nothing else out of the revenue account. That stacks up. So, once you spend that $500, like mentally, $500 is your goal. So you should only have $250 at the end of the month, or what I say, $750. Yeah. So you only gonna have $250 left in that account, because you only plan to spend $500. So the reason why I say you put $750 in there, or keep $750 in there, because you only gonna transfer $500 a month in there, is for a backup, is a buffer, just in case you do overspend. You would have the money, and you would have to replace it. But your goal is to not overspend. Your goal is to only spend $500 on the dot, and you will be satisfied when you do that. You be like, oh, I got $250 in my everyday account. That's great, because I met my goal. I was disciplined. And then you refill it with that revenue account. You do this every time. You do this. You do this every single month. If your surplus of money is $1,000, then you saving $1,000 every month. That's $12,000 a year. You should be able to pay that debt off. Like, you should be able to pay off everything within that time. I mean, granted, that's if you only, and let's say you got $10,000 worth of debt. You could negotiate that to 4. So you'll be out of debt in 4 months. Versus 6 months, 9 months doing credit repair. And you could get them to delete the debt. You could get them to delete it as you pay it. I'm not saying no payment plans, but I'm saying when you pay it, you could get them to delete it. Negotiate a deletion. And I go over how to do that in one of my other videos. But this is better than credit repair, because you could focus on your job, focus on building better money habits, and just you'll be debt free in no time. Now, the other thing that people don't understand about credit is you have to rebuild your credit. So a lot of people just don't know how credit works. And this is a key principle in finances and wealth, because you need to know how credit works. So once you have good money management skills, when you could personally manage your money correctly, then you could manage credit. So credit is essentially other people's money. You'll be able to manage other people's money correctly. So the extension of these accounts, the everyday account, the fixed account, you will have credit cards that will couple with these accounts. So you have two main credit cards. You can have more than 2 credit cards. The optimal number of credit cards to have is 3. But you can have 5 credit cards. That's not a big deal. But you should have 2 main credit cards. The one credit card is the credit card for, like, let's say your fixed account credit card. This is the credit card you do not carry with you. This goes in a drawer with the debit card for the fixed accounts. Instead of paying your bills out of the fixed accounts, you would pay your bills out of the fixed account credit card, your main credit card. So everything's on auto pay with this credit card. Yes, you could put your mortgage on a credit card. Yes, you could put your rent on a credit card, by the way. If you was asking, how do you pay rent with a credit card? It's a service called plastic. You could pay your rent with a credit card. So this is how you maximize your points. This is how you maximize your rewards, your travel, your flight miles, all this good stuff, your cash back. This is how you maximize a credit card, because all your bills is going on this credit card. And instead of paying the bills out of the fixed expense account, it will be paid from the credit card, and the fixed expense account will pay the credit card each and every month, because you don't touch that money in that account. You still do the same processes when it comes to transferring money from the revenue account to the fixed account and the everyday account. You just don't touch the money. You just don't use those debit cards. You just don't touch the money. You just use the credit cards, and then put that credit card on auto pay and let that account pay the credit card each and every month. And again, this is how you maximize your credit cards. And this is also how you protect your money, because the scammers and jammers won't even know. They won't even know your bank account information. They will only see your credit card information. And if your credit card get compromised, you have 0% liability on credit cards. On most credit cards. And they would instantly give you that money back and go fight your case. Versus a bank account, you're going to have to wait 5 to 10 business days for you to get your money back. And you still got to pay those bills or whatever. You know? So you want to, this is financially protecting yourself at the same time. All this is good. This is excellent practices. So again, for the everyday account, or I should say, in addition to, this is your everyday account. Instead of keeping that everyday debit card on you, you would put that in your drawer. You won't touch it. You put it in your safe or something. And you will have an everyday credit card. This is the credit card you use to spend on your everyday expenses. And you only spend $500 a month on there. And then that $500 a month from that everyday checking account pays that credit card on auto pay. I explained this in a different video. I'm just breaking everything down to y'all right now. No secrets. Because I want y'all to be financially prosperous. So once you get the discipline down for your personal cards, your personal accounts, you could move on to credit cards and maximize the usage on your credit cards. I'm not talking about utilization. You want to keep that low, but you're paying these cards off each and every month. And this actually, the credit card companies will love you for doing this. They're like, oh, this person knows how to use credit. This person knows how to manage their money correctly. And this is how you get higher limits. They will maximize your limits because of this activity. And you can have 2 other credit cards. Like I said, you can have multiple credit cards. Those other 2 credit cards could be for backup, emergency fund. This is if a crisis happened. You know, and hopefully you don't have too many of those. But you will also have a huge savings account that will, you know, because you've been saving money, because you've been on budget, that will be able to pay that off. You will have a huge emergency fund that will be able to pay off that credit card for the crises. You won't use your main credit cards for crises because that's on a strict schedule. So this is the cure to bad credit. I really hope y'all get this. Like, please ask me any questions in the comment section about this system, about this principle. Because if you really get this down pat, this could change your entire financial trajectory. And from here, you could then go on to build wealth. You could go ahead and invest. And that's a whole nother story. That's going to be a whole nother video. But I really pray that this helped you. So again, if you enjoy this type of content, please like, comment, share, and subscribe to the Credit Monster. This is Daquan, and I talk to y'all on the next one. Peace.